Hi, my name is Khleif, and I'm the host of the Lifetime Cash Flow Through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome to another edition of Lifetime Cash Flow Through Real Estate Investing. I'm Khleif, and I'm thrilled you're here. And you're going to get tremendous value from the gentleman I'm interviewing today. His name's Dave Codray, and he's a co-founder and partner at Greenleaf Capital Partners. And boy, they have done tons of stuff. And so I'm not even going to attempt to go through all of the things that they've accomplished, the transactions that they've done, but we are going to have an incredible, wide-ranging conversation today. Dave, welcome to the show, brother.
All right, Rod, thank you very much. I'm excited to be here. I've listened to a bunch of your episodes. It's always exciting to hear what's going on in the multifamily space.
Oh, well, I appreciate that very much. Well, why don't you, start out by giving us your background? Why real estate, when you got started, and maybe some highlights along the way, and bring us current.
Yeah, I got started in real estate really like at the end of high school. It's something I've wanted to do forever, and I started out basically as cheap as you possibly could find something to buy that was like an abandoned townhome. That's where I started. It took me a few years before I got into like 3 or 4 unit, basic converted row homes, and eventually worked my way into what I would say is like pure multifamily.
Where, by the way, where'd you start?
I started up in Pennsylvania. So I was in north of Philly, and eventually now I'm down in Atlanta. It's a lot warmer. So
yeah,
that was always a goal to kind of get further south. But I started in Atlanta in 2008. So that was kind of a prime time to start acquiring.
Perfect time, actually.
So, and that worked out well. And throughout that time frame, I've done a mix of, single family homes. I've done some student housing rentals that were, in multifamily space as well, kind of a subset there. And then what I call the pure multifamily apartment buildings, and then mobile homes as well. So a little bit.
I know you've been in over 4,000 doors on the multifamily front. I see here 2 million square foot of industrial space, and so on and so forth. So you've done a lot of different things. I think you told me before we started recording that you're now vertically integrated, so you're managing all these assets as well. So I'm assuming they're centrally located. Are they all down in Atlanta, or where are they? Yeah.
So really, if you look at geographically, we limited the places that we were going to invest in because of how we're going to operate. We wanted to really be able to see everything and touch it. And even with our investors, they want to know, like, hey, where is this stuff? So everything's centralized in Atlanta. And then we go kind of northeast and northwest from there. So Chattanooga is northwest. And then if you go northeast of Atlanta, you have towns like Greenville and Charlotte, North Carolina. So we invest in those as well. But that's pretty much it. There's a lot of people in that segment. We don't have to go too far.
Right. No, there's plenty of property there, plenty of deals there. And so when did you start acquiring multifamily in the Atlanta market? What year?
Yeah, that pure multifamily, probably like 2011 is when we bought like our first big assets that were multifamily. Prior to that, we've been doing just single family where you had multiple tenants in a house, but not like real multifamily.
Right.
So 2011 was kind of the first, just big distressed purchases, and the prices per door were slightly different back then, but so were the quality. Quality was like, oh my gosh, we're going to actually pay money for this.
Right. No, I mean, some of the pricing is just insane, 40, 50, 60 grand a door or better. And, we all know what it is now. And so we'll talk about your strategy for success in the multifamily space. What sell yourself a little bit as to how you operated to be successful. Now, I mean, hell, you could fog a mirror. Full disclosure, you could fog a mirror up till a year ago and be fairly successful in the multifamily space. But I know you've done some things that other people haven't done that I'm impressed with. So elaborate on that a little bit.
Yeah, I think things have done very well over the past years, just with valuations changing and debt going down. So it made values excellent.
Right.
But I mean, still from going back to 2011 and even before that, it was really operationally driven. And that's where I think the biggest focus needs to be. I mean, if you're a good operator, you can make money in any environment.
Yeah.
If the market is excellent, almost and not that everyone is going to make money, but it's going to be a lot easier. But
Sure.
if there's challenging markets, the strong operators they really excel.
Like we're getting into
frames.
right now.
Yeah. There's a lot of debt that's going to have some issues coming up here. Anything that matures in the next, 12 months, 18 months, debt rates are a lot higher, and you're going to see some needed capital infusions, and there's going to be some challenges operationally. Even with inflation, as all the costs have gone up, you've really got to be, on it from a management standpoint. And I've always been integrated with the property management side and the investment side. So all the deals that we buy, within the residential space, we're operating all of those assets.
So you've got a separate property management division. Yes?
Yes.
Okay.
Yep.
And do you have a separate construction division as well? You're handling the renovations on your units when they come up?
We have basically we have two kind of segments within that. One, like a capital improvement projects that they're going out and doing, a $5,000 to $25,000 repair at a property.
Mm-hmm.
And then if it goes beyond that, we have project managers that are out there overseeing those construction projects as well, even on top of like a larger plumbing GC or electrical GC that we may have to hire for something. We have our own internal team that's overseeing it as well.
How big is your organization? How many people are in all your divisions if you total up your employees and contractors or whatever?
We've got about 70 people total.
70. Wow, fantastic, fantastic. And as you were growing, did you start that way where you self-managed your first apartment complex?
Yes, directly self-managed. Yes.
Okay.
That's
so your butt was there. Your butt was there every day. Okay, got it. Okay.
Oh yes.
Wow. Okay.
Even the first probably the first 7 deals that we did, me and the first partners and team members that I had, like we were doing the renovations ourselves. Like that was our way
swinging a hammer, everything, huh? Wow.
Yeah.
That's how you do it. I've been on roofs. I've done it. Yeah. I feel you. I don't like it, but I've done it. And that's how you start, man.
From a team standpoint though, like even some of the guys I work with now, those are some of our best, funniest moments of doing that stuff together. And I think you start a business, you've got to make sure you're doing it with people you want to spend time with, and figuring that kind of stuff out. There's no quicker way to get to know someone than doing that.
Honestly, I love it. Frankly, I do enjoy it. I don't want to do it anymore because everything hurts now, but I love doing that stuff, and the laughing and the fun you have and all that. And you learn. I mean, you're going to have, you have problems, you have things pop up that you didn't expect and so on and so forth. But what an incredible learning experience. You agree?
Yes, it was. Yeah. It was great. Some of the best times of my life doing that stuff.
Yeah, I have to agree. It's funny you said that, but you're absolutely right. Now, as I think you've indicated, at least on your bio here, that strategy, your strategy can limit your growth somewhat, but it's a very conservative, hands-on operational approach. Yes?
Yes, definitely. I mean, it certainly limits where you can go geographically.
Right.
Because, you have to scale in different stair steps with a management company and with an acquisition strategy. So one can't get too far apart of the other one. And if you're going to go look at buying something an hour away, well, not only does it have to be a good deal, you've got to work with your management team to make sure it's something they can execute, can maintenance get there in time to meet, the service levels that you want to have.
Right.
Can you lease it in that market? Because it's different. Every market in real estate, which is great about real estate, is that an hour away is it might be on another planet half the time.
Correct. Everything
could be totally different market.
Yeah. Yeah. Your core team, I know you're a co-founder, but your core group when you first started, or maybe what you've evolved to, what are the different hats that people are wearing? Like what hat do you primarily wear? I'm assuming you've evolved into roles that you're not bumping heads with each other doing the same stuff. Can you elaborate on that a little bit?
Definitely. Like as you hit different milestones, the business needs people to do different things. Mm-hmm. And it kind of, as a leader, you're always stepping in to say, hey, what does the business need next that I can go fulfill and do? And a lot of that recently has been on the finance side. So that's kind of structure, like, what does the evolution of our structure look like? What is the evolution of how do we report provide transparency? How do we structure our reserve policies so we make sure, we feel like we're well capitalized? 2 years ago, 2020, almost 3 years ago now, I think that was a big shift in how people look at reserves. So we completely redid our finance structure, assuming, we need to take a more conservative approach. We really need to start building up more and more cash in these deals to plan for things. So making that kind of shift, and that was where I led when we're doing that kind of shift.
Give me an idea on an asset, what you're comfortable with having in reserve. I'm just curious. I know what we do. I'm just curious how it lines out with what you do.
Yeah, so we had a pretty formulaic approach to what we were going to do.
Okay.
So every quarter, we want to have 3 months of total operating cash. So whatever we spend in OpEx on everything, debt, maintenance, CapEx, whatever happened in that past quarter, we want to have that much cash on the books.
Okay.
And then we want to also have our taxes for the year, our insurance for the year, and then we want to have $500 a unit in CapEx.
Wow.
So that's got a chunk there. That's the buffer.
That's more than we do. We do 6 months of expenses. But that's even more than we do, which is really impressive. That's a very solid conservative approach and safe. It's a safe approach, honestly. And guys, we're talking about money you got in the bank in case the what hits the what, and that's happening right now. So liquidity is everything, and I'm seeing it with operators right now that have no liquidity, and they're getting problems with their debt and have debt coming due. And we were talking about this before we started recording, and there's some guys that are really in trouble. And right now, your approach is critical, frankly, for any operator that's out there. Is this really heavy operational conservative approach with where we are in the market cycle. I know you've seen this, Dave. You've been in the business a good bit. That there are a lot of operators that got in the last few years, and when everything was fantastic, and again it was hard to make a mistake because the rents were going up so fast. But a lot of these guys don't have operational experience or don't have people on their team that have operational experience. And I hate to say it, but there's probably going to be some pain. You agree?
Yeah, definitely. I think, valuations covered up a lot of expenses.
Right.
And I think going forwards, the next 2-3 years, operators are really that's going to be where the money's made. And it's a hard conversation to have with investors too, of saying like, hey, all of a sudden we're going to totally shift our reserve plan. We're now going to have this pile of cash for just in case.
Yeah, where you might even limit distributions for a little bit to make sure you got the cash. Is that what you're saying?
Oh yeah, definitely. Yeah, we had certain deals where we're like, look, we're not going to distribute until we hit these reserve thresholds. So we need to hold this cash. Now at least we're getting a little bit of interest on that cash, so that's helpful.
Oh yeah, that's right. Yeah, that's helpful. Yeah, I've just came across some of that myself. That's forget the main banks. Talk about multifamily specific, because I know you can talk about the other asset classes as well, but talk about some hiccups along the way. I call them seminars instead of failures, but talk about a couple of doozies or one or two, and the lesson learned. And it can be in any part of the process, and financing and the equity raise and the due diligence and the CapEx, whatever.
I think the biggest thing over the years that I've learned is time. That's really where all the challenges we've faced have come down to. Give me an example. That could be, we were doing a renovation project, and this was around 2019 going into 2020. And we're like, hey, we're going to turn these units, and then we're going to do all of them in like 8 months, and it's going to be great. And we've been doing this for years. So we're pretty confident on our timeline that we could do it, even though that's hard to turn a whole apartment complex in under a year.
Sure is.
COVID happened in the middle of that. And, we were delayed a year on finishing up our units just because that was, that's what it was. And that time really hurt us on that deal because it took us twice as long to turn the units as we had planned for. And that required a whole lot of extra equity. We didn't hit our revenue targets because we couldn't turn the units. Materials are more expensive. You were getting pushed on both sides in that situation.
But what did you do to get through it? Just had some hard conversations with your investors, or what? Talk about how you got through it.
I mean, we were a year late on making any distributions from what we had planned. This is a turnaround deal. So, we didn't meet any of those timelines. And that's definitely not a fun conversation to have, of saying like, hey, we are behind, and you can't really say, hey, none of it. It's all the sponsor. It's all on the sponsor. There's no one really cares about.
You have to own it. You have to own it, but you'd have to be an idiot not to know what was going on as well. So there is that.
Yeah.
You can bitch, but open the paper or look in the news and you'll see that, this is not poor operations. This is an environmental thing. But you're right. I mean, that's never fun to have those conversations. Yeah. In the multifamily space, what would you say is your well, let me ask you this. A better question. Can I ask how old you are?
41.
41. Okay.
Yep.
You've done a lot in the short amount of time. I've got socks that have a decade on you, but that said, if you could go back and tell 18-year-old Dave something about this business, real estate in general, and this will be really helpful because I have a lot of people that haven't done anything in this business yet. They want to do it. They haven't taken action. What might you do differently as advice to these people that are listening?
Gosh, I feel like I started pretty earlier, but I wish I started just earlier.
No kidding.
Starting, having a longer term horizon than saying, hey, I want to get into real estate so I can make some money today. I think that's a hard way to look at it, because you're going to then see like, wow, I didn't make money today. Oh, now I should quit. And it's really got to be, I need to get started early. And my goal is to make money over a 10-year period or a 20-year period. So really being able to have that longer term outlook and not be so concerned whether you're making money like immediately. If you're able to buy something and hold it and operate it, you're going to learn so much from doing that it'll make the next one easier, and the third one, the fifth one, the 10th one so much easier.
Did you tighten your belt initially? Did you live below your means as you were getting started?
Yeah, my wife wouldn't think that was super fun, but one of the guys I started with, I slept on his couch for like a year when I was in Atlanta. Yeah. It was like, we need to take all the money we have to start this business.
I hope you're listening, guys. I remember I had 500 doors and I still lived in a 1-bedroom apartment that I was getting for free because I had another business that was an advertising business that was advertising for this apartment complex. I had these cold air balloons that went on roofs, and my happy ass was up there tying them off on the 3-story roofs. But I had free rent, and so and that's what I did, and that's what you do to be a success in anything. You grind for a few years like most people won't, so you can live the rest of your life like most people can't. You agree with me, Dave?
100%.
Yeah.
Like you gotta. The multifamily space it's not easy. It's not just like you just show up and it's magic.
Right.
But if you put that effort in and you get started early and you have a long-term vision,
it's not a get rich quick. It's not a get rich quick business. It's just not. If somebody tells you, hey, get into multifamily, you can get rich quick, run the other direction. It is to become super freaking wealthy over time business though. Okay. If you can have that long-term horizon, but so what drives you, buddy? I mean, let me ask it a different way. How do you line out your goals? And when you first were getting started, what did you do? How did you come up with targets? How did you keep those targets in your mind's eye? How did you work to those targets? Give us a little of the mindset stuff and the things that you did.
I think, a lot of that changes with age too.
Of course. No, it evolves. I'm saying when you got started. I'm saying, because there's a lot of people here that haven't done anything yet. So I'd like to speak to them.
I just wanted to be able to find a path that I could replicate the amount of money I was earning from my job with real estate. It's like, that was my only goal. That's all I wanted to do was
What kind of a job did you come from? Just out of curiosity.
I was working at Deloitte Consulting. So I had a consulting job and I was there for a few years.
Business consulting.
Yep.
Okay.
So I traveled a bunch. It was a great start to a career, and I loved it there. But I ultimately wanted to have more flexibility, which I don't necessarily know if I fully have, but I like what I do. So you're spending time on it, and I just wanted to find a way that I could replicate my current income with real estate. So it's like, how much do I have to save to do that?
Let me just say this. I mean, that's a great framework for running any business. Obviously, you're doing business consulting. You know what works, what doesn't work. You're learning, and as you're teaching, you're learning a ton. So that's a great framework. And guys, there's so many frameworks that you could start with to get into this business. Sales background, underwriting. You could be an analytical background, asset management. You could have project management, construction experience, or management experience. Period. So there's a lot of different hats you can wear in this business, and it's absolutely a team sport. Oh, you know what? You didn't give me the answer to your core team. What, how many people are in that core high level, top level team, and do you guys each wear different hats?
Yeah. Oh, yeah. We've got about 8 people kind of running all that stuff. And that goes down to, we have regional managers that are overseeing all of our residential assets. Right. So they've got a wide array of team. They're back and forth between various properties assets all the time, and then within that, we CFO that's running all the finance stuff. Our chief of staff oversees all of the people activity that's happening. And then I have other partners that are helping with the acquisition side too, because it's, that focus on being able to find a deal, no matter what the market is. Right. Like I'm a firm believer that doesn't matter what's going on in the market. There's always an opportunity to find something. It just takes,
you might have to kiss 300 frogs to find one. And that's been the case, and that's okay. That's what you do. So what's the driver for you? Okay. What do you have any core beliefs that help you stay focused and energized and motivated?
Yeah, certainly. I think, one, you've got to love real estate. So that's got to be that's kind of got to be the given, and you've got to love working on a team. So those two, none of this is happening if you have those 2 factors, because like you said, it's a team sport. You can't do anything.
Let me interject. I want you to continue, but let me interject. Guys, listen, you can learn to love anything. Okay. You can associate pleasure with whatever you're doing, even exercise. But I'm going to tell you this, and I tell my students this: if you cannot learn to love it, for God's sakes, go do something else. Life is too freaking short. But when you love what you do, work is play, and you never work another day in your life. And when you love what you do, you're passionate about it. And you have to influence people in this business, and that takes passion. And so I love it. You love real estate, and you got to love working in a team. You're right. It's not there's no I in team, right? You've got to figure out what role you're going to play. And I would tell you to play to your super strength, play to your superpower. Hire a line or partner for your weaknesses, but build your strengths, because when you're playing in your strengths, you'll love it and you're passionate about it. Sorry I interrupted. Please continue.
No, yeah, it's completely true. And and what drives me, what gets me excited is as you kind of hit these different thresholds of growth in the business, certain things break. Yeah. And my passion is just, what can we do next to break something? Because as it breaks in the business, that's when you get into uncharted territory. That's when you get to solve new problems, because there's always something new that you haven't done before.
What a great attitude about it, man. I love that. I'm going to steal that. How can we break something? Because of course that's when you have the most growth. Because what's the one thing that's constant? Change, right? And so you're looking for opportunities to improve. I love that. I love that.
And it gets you into some exciting projects that are just you would have never known how you're going to do them.
No, that's awesome. Well, what's your why, man? What's driving you? You got kids, a family. What's the why that gets you to jump out of bed every morning?
Oh, no, I'm married. I've got 3 kids, and I kind of think about that why. It's like, hey, do I do all this work for my kids? It's like, well, sometimes, but most of the time I'm doing it because I find enjoyment in trying to solve these problems. My kids ask hey, what are you doing at work? And right now we're working on a pretty unique video solution to monitor, different parts of the property, but it's hard with so many internet connections and, trying to use some radio frequency, interesting stuff that is certainly out of my skill set. But the guy on our team that's leading this, it's super fun to just see kind of
that's cool.
What we're doing, how we're going to solve that problem.
What's the age range of your kids?
9, 7, and 5.
Oh, wow. Okay. So, that's awesome.
I got some little ones, and it's fun. And I love showing them when we go to different assets. I show them, hey, look at this piece of real estate. I want to show them and take them around and have them walk around and see it. So
sure. Whether they follow in your footsteps or not, you want to show them. And let me ask you this. So you've got this core team. How often, what sort of do you use a business operating system like EOS or anything like that to keep you on track with an action plan?
I've done some stuff with Vern Harnish and the scaling up stuff. So similar to EOS and we do the morning meetings every day on kind of like, what is our task today? What is the goal for the week? We go through that with the whole team every morning. And then we have a weekly meeting called TPS. So when I first started Greenleaf, I didn't want to have like big corporate sounding stuff because I just left that environment. So the movie Office Space, they always talk about TPS reports, and some of my team members now they're like, Dave, we've never even heard of that movie because it's so old, but it's hilarious. And so we named our main weekly meeting our TPS reports, which doesn't stand for anything other than to be entertaining, but it's once a week that they get together and go through all the metrics of how their asset is performing.
So you're looking at a scorecard, you're looking at KPIs, you're measuring everything. One of the things now Vern Harnish, is that the Rockefeller Habits? Is that? Yep. Okay. That's okay. I used to train from that in a big company that I had as well. We'd have somebody do a lunch learn and do a chapter on that book. And we use EOS now from the book Traction, which has been really helpful for us. You pick 90-day goals. And I love the fact that you have one person accountable for each thing. If you have more than one, nobody's accountable. And the one other thing I love from them is instead of an organizational chart, you have an accountability chart, which is kind of cool. So if you haven't ever looked at that, you may want to take a look.
I think I've read EOS. I think it's a great platform, and we just kind of tweaked it a little bit to work for us. And one of the things that we kind of do or added into that was this concept of goals, where our team members they're compensated for either a work goal or a personal goal. So
that's awesome. That is so freaking awesome. I love that. In fact, I was about to do that. I'm about to do that with my team, which I used to do at another company that I had, a big one with 60 employees. And I haven't done it with these two companies I have now. I have a thought leadership business, with the coaching and all that. And then I've got in the events, and then I've got my acquisition business now. I used to get involved in the personal goals of my team, and that's so important. And that's something that and I love the fact that you're bonusing personal goals. That's freaking awesome, man. That's just so good. And what's great, what else is great about that is that's even something you can do in a virtual environment, which I don't know if you guys have an office or if you're virtual or what, but that holding, that accountability and that connection and that culture is difficult in a virtual environment. Do you have a virtual component, or are you all in one location?
Well, virtual, not really, but everyone is spread out because our assets are, we have different states. So, I'm not going to see our manager that's up in Charlotte on a daily basis because we're in a different city.
Right.
So, but we have a dedicated goal meeting once a quarter where everyone gets together and they share, what goals they're setting and what goals they've achieved. So I kind of took it as I'd rather just be around an environment with other people that set and achieve goals. Not just setting them. I want to be around people that achieve goals, or whatever those goals are. And it varies every quarter. I love that.
Guys, I hope you're taking notes. I freaking love that. I'm stealing that one. I'm my team. I'm actually meeting with my acquisitions team Thursday here before my big event this weekend, and I'm going to have them give us outline their goals, and we're going to do that because we have quarterly meetings with the whole EOS system, and we can certainly implement goals into that process. I love it. So, what would you that I've got a lot of listeners that for whatever reason haven't done anything yet, and fear, limiting beliefs, comfort, they just haven't taken action. They know they want to, but things are holding them back. What would you say to those people? What advice would you give them?
Well, one, it's hard to do it on your own.
Yeah.
Right. It however motivated you are, it's really hard to just sit there and just say, hey, any mistake you have, like, I'm just going to internalize that and eat it all myself. So really finding anyone that, not just anyone, but someone that's also successful that you can really bounce some ideas off and do something with. So you have a sounding board. If they'll get in the trenches with you, even better. Splitting something 50-50, it's like splitting a pie 50-50 is better than having no pie at all. So
thank you. 20, 30, 40% of something is better than 100% of nothing.
Yeah.
Right.
And there's all the stories out there of how partnerships work and don't work.
Mhm.
But if you find the right one and you put the right structure in place, you can have some of the best time ever working with people that are like-minded and want to achieve the same things that you want to achieve.
If you take the time to ask the hard questions up front, and guys, if you haven't downloaded my list of partnership questions, the list of questions you should ask before you get in a partnership, go to rodslinks.com, rods plural, links plural.com, and it's in the free book section. And it's just got, because partnerships are easy to get into, like a marriage, and hard to get out of. But they're fantastic. And if you take the time not to get caught up in the emotion, ask the right questions, do your due diligence, make sure you trust your gut as well. Your intuition is incredibly powerful, but you do all of those things. And, partnerships are fantastic. And then the other thing you said about team, about getting around people that are doing this, go to your local real estate investor club meetings, your meetup groups that are, or start your own about multifamily and just start talking shop and get around people that want more out of life, because who you hang out with is who you become. And so make sure you're around and there's a reason, like my warriors, my coaching students they own upwards of 150,000 units that we know of. I think it's more than that. We're trying to count them right now, but it's at least that. And those are all done between warriors. They're done in teams. And so, there's a perfect example of what you just described. So get around people. What about pushing through the fear? Do you have anything to add to that piece, Dave?
When I was thinking about it, I was like, I can always just go back and get another job.
Okay. So you just looked, you had an exit strategy in case you didn't make it, basically.
Yeah. It's like, and I know no one's like, hey, I get super excited they're going to go back and get a different job. But like, look, the backstop is that if you've got some skills and hard work, you'll still be able to get a job. If it's not going to be as great as what your vision is.
Right.
But
you can recover, and that's a great strategy, is to look at what's the absolute worst case. Absolute worst case is I go back to that W-2, that, life goes on. Or honestly, I've had tons of students that have done it on the side with a W-2, with kids, with a family, and have hundreds of doors already. Yeah. And so you can absolutely do it on the side too. And by the way, guys, if you're thinking, if you call me and ask me, should I quit my job to do this? I'm always going to tell you no. Okay. Because especially in this environment we're in right now, if you don't have income coming in, unless you got a big nest egg, if you got a big nest egg, different answer. Yeah. But if you don't, fear will pop up, and fear paralyzes. So, keep that job, do it on the side. You can absolutely do it. Well, listen, is there any question I didn't ask you that I should have, Dave? Because you've really given some great insights, brother. But
I think the other thing too is just investment strategy is, if you're just going to get started, buy something close to your home.
Yeah.
As soon as you have to start driving 20 minutes, 40 minutes, an hour, or it's in another city, you're going to be like, why did I do this?
Right.
But if it's right down the street, you're like, oh, hey, I'm going to swing by. It's not that big of a deal. I'm going to get some groceries. I'm going to swing by, check it out. It makes life a whole lot easier.
Yeah, that's
like,
good.
Just try and keep it local. Wherever you do live, it's like, that area the best. So,
well, if you can find it, I absolutely agree with you. Did you have any mentors in all of this, or did you just learn as you went?
A little bit of learning as I went, but I also, the investors that I had from the very beginning, I have some investors from 2009 that are still with me today and have been instrumental in how we've done analysis on deals, what markets we've gone into, how we look at opportunities.
You've leaned on them. You've leaned on your actual investors. Love it.
And they've provided a ton of value over the years, and they have been key to my success. They've done this stuff before too. So, and they were exceedingly helpful to me. So a lot of meeting the right people and
that's
doing
great.
it. Some of the very first people I met were the investors I have today.
Are there any books that you gift more than others about this business or personal development or anything really that you really, if somebody asks you what's a great book, what's the answer you give them?
I'm passionate about adventure. So I like the idea of getting into something where you don't have all the answers. But on top of that, there's a book called Boyd that's about a fighter pilot, and it's
Boyd, B-O-Y?
BOYD, and it's about how to make decisions. So it created a theory called the OODA loop. So you're trying to observe, orient, decide, and act. And the faster that you can do that, the faster that you can make effective decisions and move not only your life forwards or anything you're working on, whether that applies to a military situation or just, hey, what color shirt am I going to put on today? Doing that. And the better you can do that, I think the easier life becomes.
That's a great framework. What were those? What was that acronym again? And what were those words again? One more time.
It's the OODA loop, and it's observe, orient, decide, and act.
OODA, love it, love it. Well, listen, brother, what'd you say? I'm sorry.
I'm pretty sure that's the exact order.
Yeah, no, that sounds like the right order. Well, listen, I really appreciate you coming on the show, Dave. You've added tremendous value. I hope we get to meet someday at an industry event, and maybe have circle back at some point and bring you on again. But I appreciate you coming on, my friend.
Yeah, thank you very much, Rod. Appreciate it.
Take care. All right. So one other quick thing. We encounter so many people that are frankly frustrated. They're looking in the mirror and they're frustrated that they haven't been able to escape the rat race. They haven't been able to build cash flow to the point where they're able to have financial and time freedom with their families. And maybe they see other people buying real estate and creating, incredible cash flow, and they think, well, it's just scary. Buying apartments is intimidating. And I get it. See, that's why we created our Warrior Mentorship Program. They're our coaching students, and they've had extraordinary results. My students, I've been teaching about 5 years, and they own upwards of 140,000 units now that we know of, right? And we feel like it's just getting going. Now, we're looking to grow this group and really take it to the next level. And honestly believe that the greatest transfer of wealth could be upon us right now with this current economic environment. Everything's going on sale. So we're looking for people who want to follow a proven framework, really like a blueprint or a map, literally step by step. And then they're able to leverage our systems and our incredible network to raise money and equity, to find deals and close those deals and build partnerships, really nationwide. So if you're interested in finding out more about how you can become more in our incredible network and take advantage of the unbelievable opportunities that are upon us, you can apply to my Warrior Mentorship Program by texting the word CRUSH to 72345, or you can go to mentorwithrod.com. And what we'll do is we'll set up a call so you can check us out and we can check you out and see if it's a fit. Now, again, you can go to mentorwithrod.com or text the word CRUSH to 72345 to apply, and we will speak soon.